Top of the morning. Thanks for joining this breakout with Michael. This is always a great session. This is probably my favorite thing to look forward to every year to try to tackle down a hodag from Rhinelander. A couple things. We'll stay here until about 10:30. Periodically, I'll check with you all to see if you have a quick impromptu question. There were 4 or 5 questions that came in from the session. Some of them overlap on the stuff that I was going to naturally cover with Michael. I will also warn you, this won't all be about the Southeast Wisconsin economy. It'll be as much about some of the stuff that he talked about today and getting a little deeper into the color of it, including the MSOE guy. He put a formula up there. He looked right at you and said, I don't know if Michael's going to agree with it or not. Yeah. But the overall,
just to be clear, I would never put a Cobb Douglas production function up in any talk that I give to a general audience. I got to talk to Jeremy about this. Yeah.
What do you think, though? I mean, do you agree with his sort of simple logic? Although I'm sure the formula is pretty hard.
Not because of the formula, but because, I'm not a Luddite. I don't think technology change causes people to become permanently unemployed somehow. Now, he did have the qualifier, if the pace of change is super fast, you could have a surge in unemployment, but I think in our lifetimes we haven't really seen what I would call a recessionary labor market caused by a productivity improving innovation. That just really doesn't happen, and I don't think it's going to happen here. I'm not trying to minimize the issue. I think there's a lot of types of jobs that may be smaller in number. We won't need as many people, particularly in areas just producing content. I can ask ChatGPT to write a thank you letter to a donor to an engineering building at a major research university, and you get a pretty damn good draft of a letter. And I used to have people drafting that letter, and it's like boom, and it's shockingly good at some of those tasks. I did ask ChatGPT during Jeremy's talk what it thought the performance, what the characteristics are that would drive enhanced performance of large language models, just to check the plateauing conjecture, and gave me a list of 9 different things that would feed into that, overlap a bit with what he said, as you would expect. But I don't see AI driving large increases in unemployment at all. I think certain types of jobs will become less in number. The applications I'm most familiar with that I referenced in insurance, it's not making people go away. It's really improving the quality of the work they do. Imagine a claims agent getting a call from a customer, and the AI is basically organizing the content of the call and putting it together, rather than the person taking notes and then redoing the notes. So, I think his answer is the right answer. I don't think it's going to be a big disruptor of the labor market somehow suddenly. I don't know that the Cobb Douglas production function was needed for that, but hey, the research he referenced by Darren Asimoglu at MIT about the likely productivity growth, I find that more interesting. I'm sure that's really hard to predict, but I'm fairly encouraged by what I see it capable of doing, and I do think we'll see significant increase in total factor productivity, which, as I noted in my talk, that is the foundation of real wage gains or real income gains in the economy. It's when you can do more with less, or do better with the same. So
makes sense. So from a productivity standpoint, you talked a little bit about it today. You talked about it just now. Is there a diminishing return on productivity over time before you just need good old hard labor to come back and do jobs? I mean, at what point do we get concerned with, hey, unemployment's really low, but productivity continues to gain?
that would be the best scenario, is if unemployment stays low, people aren't out of work, and we continue to get productivity gains. But all of these technologies have kind of a life cycle, and there's, usually a kind of a learning curve where, for a while there's this new technology and it makes things worse because people are trying to figure it out. We just put a new customer relationship management system in, and oh my God, it's a much better system than we had, but we're much worse today than we were on the old system a year ago. But in 6 months we'll probably be quite a bit better, and a year after that we'll be even better. So some of these things have a learning curve, and then I would think with AI we're going to come into a pretty decent, positive part of the learning curve, and then that will plateau at a certain point, absent some big new disruptor, as Jeremy mentioned. You kind of get caught up to it, and but we're really kind of seeing, I think, at least the late middle innings of the promise of that fusion of computing, connectivity, and telecommunications that's been going on for 30 years, and it's enabled things like Uber and Lyft and the Ring doorbell, and ability to monitor stuff from afar, and that'll have applications in manufacturing and healthcare. The biggest impediments, to change are, are doctors going to be okay with telehealth? There's just some areas where a profession is resisting change. There's certain things we could be teaching in higher ed that I would say could be done pretty well without an actual in-class instructor, but don't try to tell the in-class instructors that, and if they have too much power in how things get determined, there's a certain amount of resistance, and that doesn't happen just in higher ed, it happens in many different sectors. Where it tends not to get in the way is when there's an owner of capital wanting a return on investment, and then they will push through the changes that are needed to reap the productivity gains and the profits that come with it. That's why the private sector charges out ahead, and the technology that you find in parts of the economy that don't have an owner of capital getting the residual earnings, like government or higher ed institutions or some healthcare, it's just not the same drive toward innovation and profit, and you can't construct that artificially. Change is really hard in an organization, and if there isn't somebody who's going to benefit greatly, if it's the customers that are benefiting, you'd think that would be enough, but at the end of the day, people have a healthy self-interest too, and it's human nature. So.
You talked last year about I'm gonna choose my words here, but you talked about the prime generation, and then you talked about the choice generation, the one older than that is mostly retired, or they don't really track anymore because they're closer to retirement.
And then I think there's select. That's the meat that's almost spoiled. Yeah, the select. Right.
So with U.S. unemployment in the low fours, Wisconsin unemployment's I think closer to 3.
Always a point below that.
Dane County's I think less than 3.
Usually a point below that.
So is the Fox Valley, Fond du Lac, Oshkosh, Green Bay, and parts of Milwaukee are continuing to experience it, particularly in the manufacturing sector. We see a lot of manufacturers in the state still. Maybe 50% of our portfolio is related to manufacturing. What's the answer for bringing back labor if schools aren't necessarily teaching some of the trades probably the way we need to? What's the answer? Any ideas on that?
Labor for the manufacturing sector specifically?
Labor in manufacturing and trades.
Well, we do have one of the best funded technical college systems in the country. So I think there are, in fact, that's something, Universities of Wisconsin President Jay Rothman has kind of pulled out into the light of day, is we're like 43rd in funding per pupil in higher ed, and we're in the top 5 in funding per pupil in the technical colleges. So I think there are opportunities there, and that's really where I would look. I am not a K-12 education expert, but my daughters are 24 and 28, so I have some recent experience with that, and I would say during their years going through the schools in Madison, I would say that quality kind of deteriorated, and mine were out of high school by the time the pandemic hit. So I do worry about, we've kind of gotten away from rigor, especially on the, higher end, math and science in a lot of our school districts. And I think that's driving a lot of families to private schools where they think their kids are going to be challenged more. And I do think that's something that needs to be discussed a bit more openly. I mean, we have kids who come from such difficult home settings that they can't keep up if things move too fast. But, I'd hate to see the solution to a perceived learning gap between different groups of students being solved by pushing the top back to, closer to the lower end. And, there's two ways to solve that gap, and I worry that on balance we're, so far it's probably causing problems, at the top, and that's unfortunate. I don't know that has to do with the trades per se, but I think the technical college system needs to be leveraged better for that, maybe deeper partnerships with manufacturers around exactly what are the right technical skills that people need. And then, of course, there's training in the manufacturing businesses themselves that can also fortify that. But, I think even with manufacturing having some, renaissance, which it may have, it's probably going to be one of the sectors that benefits a fair bit from AI. And so I don't know that the number of humans needed to oversee even ever greater production in manufacturing is going to be that great. But we need to replace those that we're losing, and that's probably a real phenomenon.
Yeah, great. Thank you.
As you know, I don't necessarily encourage more people to move to Wisconsin because it gets crowded. Who needs those people? We're doing okay, We could make more money. I mean,
yeah. And yet the Southeast corridor continues to expand pretty
Mm-hmm.
dramatically.
Mm-hmm.
So, right towards the end of your presentation today, you talked about that dude that flashes the U.S. debt up on the tower.
Yeah.
You need to add a few more digits to it, likely. $2 trillion structural deficits, without interest, kind of going on. It seems like in infinity. At what point do you really become concerned with the amount of public debt, U.S. public debt held by the public?
Yeah. So the reason I didn't, assemble more data and go deeper into that is I can't answer that, and for the simple reason, like we kind of know the conditions under which countries like Argentina will have a currency crisis. But those are countries whose currencies are often pegged to the US dollar, and when their inflation rates get too high relative to US inflation, they got to start raising their interest rates to defend the currency, and then eventually rates get so high that's unsustainable, and the fiscal authority is spending too much money, and all of a sudden there's a run on the currency and everything collapses. And you can kind of say for those kinds of countries, what's the level of debt to GDP? It's both the stock of debt and then the run rate of deficits that add to that stock of debt that will, you can get to some reality. What's different about the United States is we're the reserve currency for the world right now, and as long as that's true, we're going to get feedback in the form of what our interest rates need to be, but it's a very different situation than other countries tend to face with their currencies. And so, the point at which we would have a real debt crisis, and which would become kind of a dollar crisis as well, is really hard to answer. It depends on your expectations about the future, the growth rate of the economy, our ability to tax, other people's willingness to hold our debt. Everybody worries, I think, so many foreign governments hold our debt. What if they all sold it at the same time? I'll tell you one thing that would happen is they'd lose a hell of a lot of money because the price would, go down so fast that, we're the ones that have been over the years collecting all the goods and services that offset the dollar balances they hold to defend their currencies and just as an asset to hold in their central banks and elsewhere. And so we've already eaten the stuff, and they got pieces of paper. They don't know what they're going to be worth in the future. So I'd say we've gotten a good deal, but it is true that if we were to have a crisis, our kids would bear the brunt of that, and we were the ones that got the goods and services. So that we should be a little cautious about how hard we push this. But I don't like where we are today, so I do worry. But it's very hard to say the point at which people will begin to say this is really unsustainable and begin to trade as if that's the case. I don't know when we get to that point. We're not there today. The dollar got a little stronger over the last year. So
as long as the dollar stays relatively strong, not an immediate concern, something to watch, but not to worry about yet.
Yeah, but things don't line up very well at the moment with the projected surge in entitlements, higher levels of inflation, which mean higher interest rates. So just debt servicing costs are going to be higher. Wages are going up a little faster than normal because of inflation too. So, getting through to what's nominal versus real is also in play here. But we're not on a great path. I mean, we have to do better. We really have to do better.
So do you think, sort of along those lines, as there's been a lot of discussion about debt limits, should we increase the debt limit? Why do we keep doing this temporary pass for 90 days? Given, that we have to renew, the government has to renew the tax cuts, which we know will add to the deficit over the next 4 years. Likely are going to increase spending in all kinds of things before they start reducing it. What do you think about increasing the debt limit?
Yeah, I think we can do that. I do think longer term we should be working toward some limitations on how rapidly it can grow. So rather than saying this is the cap, there should be some growth rate, and budgets should probably have to come in at a level where reasonably we think we're on that path that we think is sustainable. I mean, debt can continue to grow, but we gotta have some governor on it, I think. And it's just very hard for any sitting administration to not give out more candy than they take away. And we're just getting worse and worse at that. And you saw it in the pandemic. Trump gave away a fair amount of stuff before the election. He lost. Biden comes in. He's got to give out some candy too, because the other guy did, and that's why we had more inflation than we should have had. But yeah, I think polarization has made this problem worse because the competition between the competing visions, politically. How do they compete for voters? They give you more candy than they take. I mean, that's kind of part of what it is. And if we had more centrist control, I don't think the problem would be as bad as it is today. So anything we can do in our politics, and there's a lot of people that work on this, some in the Milwaukee area, to change voting procedures that would produce outcomes in primaries that were more favorable to centrist candidates would, in my opinion, go a long way toward helping us craft better long-term solutions. I think it's like immigration, things like Social Security. I mean, we should be increasing that retirement age by a month a year for I don't know, a number of years, so that we had, just recognizing people live longer. Whatever deal we set up is no longer actuarially correct. We should fix it. It's pretty basic. You can't just change it overnight because people are going to be super mad, but you might as well put something in place that people can plan for. Yeah. But we just don't do these obvious things, and that tells you the political system is kind of broken.
All right, three legs to the inflation stool: goods, services, and rents. Rents is the stickiest of the three. Goods was coming down nicely over the last 12 months until it wasn't in the last,
Yep.
45 days. Services, also. How do you correct the maybe the lagging impact of rents on inflation, given higher mortgage rates, which lead, which obviously lead to higher rent costs? At what point in time, I think your forecast was still in the threes for 25. At what point, what is the elixir that brings down the third leg
The housing
of the
costs.
inflation tool?
I think markets should be able to take care of that, and that may not address a timing issue in how that feeds into the calculation of the CPI. But I am not a big fan, again, another manifestation of the competition between the parties is, we're going to give, every first-time home buyer now, because mortgage rates are, 7%, for people my age, that's still reasonable, the broad sweep of history. But yeah, you should get, $25,000 for buying a new home. What? The people that are lucky enough to buy a new home, they get $25,000, and then there's a bunch of people that still can't afford it and they get zero? It's kind of crazy what we come up with. But, that goes back to Russell Roberts' policy advice, the opposite of his mother's advice to him as a kid. Don't just do something, stand there. Markets will fix housing issues eventually. Sometimes local governments and whatever have to get out of the way and allow development to occur. And that's what needs to happen. And I think the federal government trying to solve that problem, apart from maybe some, welfare-related low-income housing projects here and there, but they have tax credits for private developers to do those things now. I think you got to let markets fix the shelter problem. I don't think that's one of those things. I would want to put the government in charge of shelter, for everybody. But that's just me. I am a believer in markets, and usually when something like that isn't working well, we should be asking ourselves, what are the government regulations and policies that are keeping that market from delivering a rational outcome? Because there is a demand for shelter, and unemployment, like you look at the state of Wisconsin, we're talking unemployment rates are super low. Maybe wages in some sectors need to go up a little bit for people to be able to save enough. But last time I checked, people in Wisconsin are still drinking a lot. Maybe they should do that less and shelter. I don't know.
Or more.
Yeah, depends. But everybody who complains, I always wonder, my dad worked in a paper mill for 38 years. He wasn't even able to take up golf until he was retired. People today live better than the predecessors in so many ways when you look at just analyses of how people spend their time. And we're just our expectations are too high, I would say. I always told my kids, happiness is expectations minus reality, and you aren't going to be able to control reality completely, so curb your enthusiasm, Be a little happier.
Did that work?
I guess it's reality minus expectations. You want reality to be better, but yeah.
Dave,
They seem actually really happy and they don't spend money.
This, so we could get a copy of some of these quotes.
Now, that one you should just write down. So, all right, so the forecast for 25, really kind of a conservative forecast, Mike. Unemployment stays low, inflation stays in
Unemployment
the low
gets
threes.
lower, growth is kind of more the same, inflation doesn't really come down much, and that's predicated on a belief that we'll have problems at the low end of the labor market because of threats of deportations or actual deportations, or kind of closing off the border more. That will make things a little more challenging in certain entry-level jobs that can be difficult to fill without those workers. And so that's what I think keeps inflation elevated, along with the tariffs. So Yeah, it's a big ship. Most of what drives the ship is not really government policy. And I think some of the policy that is being talked about, that there is an element of negotiation here with other countries. And so it is a little hard to predict what's actually going to be put into place versus, when we declare victory and say, oh, we had a great discussion with Xi and now, we're friends. And that would be a great outcome.
Yeah.
I wish we were friends.
So your forecast has already taken into consideration the impact of tariffs, geopolitical risk, immigration reform, not immigration reform because we haven't even gone there yet, but deportation. So
Potentially, yeah.
Is it safe to say that in your forecast you're thinking that each of those three things are muted in terms of their impact on the domestic economy in 25?
I think they manifest largely in higher inflation, and they keep the labor market pretty tight because both of them reduce competition either in the labor market, we don't have as many people coming in, or the product market, foreign products aren't as competitive, so that keeps the domestic labor market tight. So wages might go up faster than the 3% inflation, but I think it's going to be hard for prices to come down when you add those headwinds on to what we've already got going, which is already a pretty tight labor market. So that's the, if anything, the bad news. And that growth number is real GDP, so nominal GDP growing at about 5.5%. Could be higher. We might, if the AI revolution really drives measurable productivity growth could get, a little better than that, maybe 3%. But, and I think, Steve from A.O. Smith had a plausible perspective on, maybe people are really optimistic and all this comes together and 2025 turns out to be, a pretty, frothy year again in the stock market and elsewhere. Could be. But, I also, I read Michael Semblist's outlook again last night from J.P. Morgan, and, he's not as optimistic about the equity markets himself. And I think there's enough disruptive energy around the Trump policy team that something could get kind of broken, and we'll decide, that wasn't such a good idea. I don't know. I say that without any, thinking one way or another. We have an economist from UW who's probably going to be a part of the top policy team. But
As we think about, I'll tackle tariffs and I'll tackle immigration for a bit, and then there was the third one. Oh, geopolitical. As we talk about tariffs, how should we be thinking about the rhetoric around tariffs? Is Trump using it as a carrot and stick to say, hey, I really want something else, but I'm really gonna hurt you on tariffs? Is that how we should be thinking about it? I mean, because he's a pretty smart guy. Even he realizes that if he charges probably our best trading partner to the north, where we get 60% of our oil today at below prices from Russia, etc. That would be a bad decision, at least in my opinion, to charge them 25%. So how would you have us think about his discussion on tariffs?
I think it's with Canada and Mexico, we want really other things more than we care about levying tariffs on their products coming into this country. With China, and the other things probably have more to do with the border security and things like that. With China, we don't want them to be a competitor for artificial intelligence dominance and leadership in the world, because if they were to eclipse us, that would have ramifications for military and other things that would be very unfortunate. And so that, I think the agenda with China is completely different than the agenda with Canada and Mexico. I think tariffs are, something that the president can control, and so that's sort of the weapon of choice. I would never represent that I know what Trump is actually thinking. That's fair. I mean, and I don't know that anyone would. So I'm just guessing, but, if from a rational standpoint, I think that's how to think about it. That doesn't mean we won't have tariffs on Mexico and Canada that are higher than what we have now, because we may not get exactly what we want, and I don't know how that negotiation will go. So when I make a forecast conditional on, border policies and deportations and tariffs, I don't, I can't even tell you that I thought about, well, I think the tariffs are going to be this much higher on Canada and this much on Mexico. I just think the tariffs are going to be higher somewhere, somehow. Certainly on, technology products with China. I don't think we want them to grow their EV, market any better than we can allow. Anyway, so it's just kind of a guess.
Yeah, right.
Yeah.
That's fair. So you talked earlier about competition's good. Is globalization dead?
It's not dead, but it's definitely being, kind of pared back a little bit. But if you look at the global volume of, foreign direct investment and trade flows, it's close to all-time highs. Listening to Steve is interesting. One of the interesting charts in the J.P. Morgan, analysis is, we have a huge bilateral trade deficit with China, which I'm going to tell you right now, bilateral trade deficits with any country have nothing to do with the fairness of the two countries, border policies or tariffs or, whatever. Like, Japan has a huge bilateral trade deficit with Saudi Arabia because they get oil. Is that bad? No, it's not bad. China makes all kinds of cheap stuff that some of our consumers want and we don't make anymore because our economy's too advanced. Of course we have a big, trade deficit. Meanwhile, if you were to add in the value of stuff that Chinese companies make in the U.S. and sell to the U.S. and treat that like an export from China to the U.S., and then add in what U.S. companies make in China and sell to the Chinese, that bilateral balance almost goes away because our companies are making so much stuff there and selling it to China. It's not exported. We're in there making it. And, that's some of what Trump wants to see, but then Nippon Steel, an ally country, wants to buy U.S. steel to help invest in that company and make it viable, and we say no. I mean, you can't have it both ways, I don't know. So that's kind of, that's odd. But I find it interesting that the trade imbalance with China almost goes away when you add in the value of all of our U.S. production in China for the Chinese market. It's pretty interesting. Obviously, that's not using our labor, but our unemployment rate is 4%.
Yeah.
Our labor is fully employed, basically. I mean, that's considered like full employment. So what are we talking about? It's very strange. Yeah, okay. Got a bilateral trade deficit with China. So what? We have a capital account surplus. They're taking dollars and holding them and giving us goods and services in exchange. Who's getting the bad deal? They got pieces of paper. Try to eat that or drive it around. You can't. So actually they just have digital entries in some, account, but I don't even think they get paper for it anymore. So anyway, bilateral trade deficits are among the most meaningless pieces of information about, what's really going on in the world. Overall trade deficits are, certainly more interesting, but, for every dollar that comes into the country, there's a dollar going out. And the question is it a match of goods and services for goods and services? Or is there some trade that is other people give us goods and services and in exchange they get assets, like real estate or financial assets or U.S. Treasury bills? And right now, there's a lot of trade that takes that form. That's our current account deficit. Some people worry about that. I don't know why. There's no reason to think those things would match up. So anyway, that's a digression. But
Before I ask my next question, any questions from the field? Go ahead.
I was just curious about your view on interest rates, if you think that inflation's sticky.
yeah, so I do think inflation is sticky, which, the Fed started cutting interest rates, kind of in the belief, I guess, that, hey, inflation's going to make it back down to target, and we don't want to overcorrect and, crush the recovery, so let's start taking rates down. I think at this point, they have to be rethinking that. And some of it will depend on what the policies are, but I think inflation is likely to get a little bit stranded where we are. I could be wrong about that, but there's obviously a lot of momentum in whatever the president and his administration do on tariffs and deportations and labor supply related issues. May not affect inflation for a while, but I just think the economy is still pretty strong, and the Fed's starting to stimulate the economy while there's still a lot of spending going on, as Steve mentioned, that's still kind of midstream spending bills that have already been passed. I think the Fed has to be wondering, maybe we got to pause on the cutting for a while. So I think rates will be higher than what's currently priced into the yield curve, because I think inflation might be a little bit higher.
I was going to ask if there's a decoupling. So the Fed's been dropping rates, but we're not seeing that in home mortgages.
Right.
We're not seeing that in treasury yields.
Mm-hmm. Yeah.
That's what you're speaking to.
Yeah, exactly. So I think the Fed can drop the short-term rates. They can't directly move the 5-year or the 10-year or certainly the 30-year. And what we've seen is those things are creeping up in some cases. So I think that tells you everything you need to know.
Because of the expectation from the bond market that inflation is going to be higher for longer.
I think so.
Yeah.
Yeah.
And that's true for 2025, the full year?
I think so.
Interest rates are going to
I'm thinking interest rates, I don't think you're going to see a drop in interest rates in 2025. Because I think people will be a little disappointed on the inflation front, and the economy is going to stay hotter than expected, and that will look like it could continue to produce wage and price inflation into the future.
So you're talking treasuries or Fed funds or both?
Fed funds will probably get a bit stranded. That's the Fed's policy tool. And then I think, treasuries similarly at the very short end stranded, and at the longer end maybe even ticking up a little bit in rates. That would be my guess. I'm, by the way, I feel a little more confident about that prediction than the S&P, but not that much. Yeah.
Maybe an easier topic is cryptocurrency. Is
I don't know.
viable?
Yeah, okay.
Is that a viable commodity currency tradable? And if it is it controllable? I know different big banks are looking at, we should really explore this. Or is it a bunch of tulip bulbs?
So, that's a really interesting, that question gets more interesting every year. So, here's what I could say that I think I know right now is the main use case is still like illegal activity or things that can be hidden and non-transparent. That is the main use case. I don't see any widespread use. Was it Ecuador declared that they would use cryptocurrency, and it's still not really. They even gave every citizen $50 or $100, and they mandated that every restaurant had to take it, and it just didn't. It's not happening. So I don't think it's a good substitute for current payments technology or store of value. So it is still a speculative asset that has some promise. There are people that can conjure up a world in which that becomes the currency. The biggest loser in that world is the United States dollar. Like, we do not want cryptocurrency to become the thing that everybody uses. Because if everybody walked away from dollars and went to cryptocurrency, it'd be terrible for us. We reap a lot of benefit from having the world's reserve currency. So you can bet probably Russia and China are very interested in seeing that happen, okay? And Iran. So we should be very careful not to pour gas on that. If we could create a digital currency that was the dollar, that would be probably a great thing to have. We'll see. Here's what makes the whole thing different, though. With every year that goes by, and more people of influence having very highly valued positions in these cryptocurrencies, their economic interest in making it something that they can cash in grows. And, you know, I don't know if you've read the stories about Barron Trump and his buddies and, you know, the crypto bros that suddenly became very influential, you know, in the late innings of the campaign that led to a lot of pronouncements about crypto. There's a lot of people that want to be able to monetize these positions at some point, I would think. And I don't really see that happening by, you know, Walmart's suddenly taking the latest meme coin as payment. I don't think that's going to happen. So we'll see where it goes, but it's getting more uncomfortable for me to think about where it goes, the bigger the valuations are that some people have who are very influential, not just in the Trump, you know, government, but just very influential people generally. So I don't know where that goes. So that's not an easy question. But I am not, you know, Warren Buffett always said, you know, if you don't really understand the use case for something, I mean, this is still, to my way of thinking, the greater fool theory. You buy it because you think somebody else in the future will pay you more for it than you paid for it. But there isn't really a productive use at this point, you know.
Maybe a good follow-up is, which coin does better, the meme coin, Melania or Trump?
Yeah, I won't even touch that. Bitcoin and Ethereum is kind of where I stop. I don't think beyond that.
You talked a little bit at the end about maybe Trump's inability to make friends, or at least keep them, or make them. I think that's fair.
He's fairly transactional
Yeah.
and represents our self-interest. And
How does that manifest itself into greater geopolitical risk, and who are you most concerned with on the geopolitical front?
you know, I'd say near term, I'm still concerned about Russia because there is that direct conflict going on that needs to get resolved. There's not yet the direct conflict with China. Long term, I'm most worried about China, and I think everything that's happened in the Middle East has exposed Iran to be a paper tiger. They haven't been able to back up their proxies that, you know, surrounded Israel and caused a lot of havoc. And so I think as that skirmish became more of a, you know, back and forth volley between Iran and Israel, I don't think Iran wants any part of a real war with Israel. They would be annihilated, you know, just based on how everybody's technology performed. And that had to send some shock waves through some other countries too, because, you know, Iran's in a network of countries that kind of want to do damage to us, and I think we found out that's not going to be so easy because Israel sits geographically in one of the most vulnerable positions I could ever imagine. And, you know, I think they came out of Iran's barrage of 200 missiles they fired almost completely unscathed. I mean, that was remarkable. So I doubt the U.S. really wanted to have to show that much technology. Not that it's all U.S. The Israelis have, you know, really talented engineers, scientists, and people developing technology as well. But, you know, they're obviously an ally of ours, and I am happy that they are. And, you know, those are relationships that are important. So I think the Middle East, you know, there might be a pretty significant realignment. I'm always hopeful that that's going to, you know, lead to some period of peace in that region, but who knows? It's really a pretty bitter region. And, you know, I'm not sure. But, yeah, Russia's the nearest term concern for me. I think Putin could do something crazy if backed into a corner. Although Admiral Stavridis, who I used to be on a board with, used to be a Supreme Allied Commander in NATO, who knows Putin, said, well, I don't know. He said he has 7 mistresses, so maybe he really wants to live. So maybe we shouldn't worry. I don't know. I don't know. I mean, this is why we don't record the session. I'm quoting someone else.
Drew?
I don't think he said it into a microphone, though.
You had alluded to some of the frothiness in U.S. equities valuation and a potential correction.
Mm-hmm.
What do you think would drive the market towards a more fundamentalist view in the next 12 to 18 months or so?
That's a good question. So I don't think that, the J.P. Morgan team that kind of said they thought enough things could get broken that it would cause a correction picked out any one particular thing. I think it's just the feeling that if there's too much, chaos and, kind of disruption going on, that at some point, maybe people latch on to a negative narrative about what's happening. And, that's mostly what it would have to be. Markets get frothy when people have latched onto a positive narrative, and that narrative is about artificial intelligence today, I think. That's really the thing that's driving a lot. And Steve had an interesting comment that, there's that group of the majority of companies who haven't really had a big frothy run in equity markets that could take over. That's a possibility. But I think if I had to guess, the JP Morgan people are most worried about trade wars. And if a trade war does break out, I think that might really change the view of a lot of the top. I mean, it would certainly start to impact earnings of a lot of companies, or at least forecasts of earnings. And then that might be a catalyst for a negative narrative. So that would be my main candidate explanation for how we could have a correction. Our friends to the north and south aren't as compliant with our demands, and they're willing to have the trade war. And then, China, we have the trade war, and pretty soon global commerce is in a bit of disarray.
Maybe one more question. Anybody?
Can I challenge the Bitcoin narrative?
Oh, sure, yeah. I mean, I'm no expert.
So I'm going to put a hard line underneath Bitcoin and chime in that all the meme coin conversation is worthy of ridicule. Like, go nuts. 60% CAGR over the last 10 years.
Bitcoin, yeah.
Bitcoin.
Yeah.
You just challenged a store of value. Like, how does that?
Oh, well, it's not stable, so store of value tends to be stable. So from 1 month to the next, it has pretty high volatility.
High volatility.
Yeah.
Michael Saylor's leveraging that volatility and borrowing money at 0% right now.
Yeah.
To acquire massive amounts of Bitcoin.
Understood.
Okay. So I just
think there isn't the fundamental use case yet that tells me why, other than a belief that somebody is going to pay more for it in the future.
So value is always utility plus scarcity. Bitcoin has perfect scarcity.
Yes.
And the utility argument is store of value.
There are a lot of things that have perfect scarcity that don't go up in value the way Bitcoin does. Now we've been told a story where it has usefulness too,
Yes.
not just scarcity.
Yes.
And I think if that usefulness goes away, there's a lot of things that are finite in terms of scarcity that do not have the dynamics in price that Bitcoin has. It has those dynamics because of a promise of future utility and scarcity. So that's my view. But again, there's a lot of political dynamics around it now because of people that have amassed such fortunes that will want those to be worth something.
It's gained its first $2 trillion in value before Trump jumped in, though.
Yep.
So
No, I understand. There's a powerful narrative around it, but I still don't see the use case. And that may be my lack of vision. But I think there are countervailing forces that probably don't want it to be a medium of exchange. So that's what we don't really know how that's going to play out. But
That That
I
is-
wish I'd invested a lot.
That is all of the time we have. He has to get back on the road for an appointment, but I appreciate everybody coming and listening in. Michael, as always.
Thanks for
thank you.